Hey everyone, Carvana reported quarterly financial results that sent the stock price soaring as much as 30% after the results came out. So I'll review the numbers in this video. I'll also update my recommendation for Carvana stock. Coming into the quarter, I did not have the stock rated as a buy. I'll update that recommendation after reviewing the financial results. So let's get into the numbers.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So Carvana reporting positive net income for the first time and its industry-leading adjusted EBITDA margin while growing retail units 16% year over year. An impressive quarter to be sure. Furthermore, Carvana expects the good times to continue, forecasting sequential increases in year-over-year retail unit growth and adjusted EBITDA in the second quarter. Now, one of the more impressive metrics I look at when I'm looking at Carvana is the number of units sold. In the first quarter, Carvana sold 91,878 retail units. That was up by 16% year over year, for a total revenue of $3 billion, which was up 17% year over year, while reaching new profitability milestones, which included $49 million in net income and a net income margin of 1.6%, and the total gross profit per unit of $6,432, which is up by $2,129 year over year. This is the metric that truly defines how good Carvana is at its core responsibility. Carvana is in the business of buying used cars and selling those same cars at a profit. So paying a certain price for used cars and then selling those cars at a higher price. And Carvana has done an excellent job at this process. Now, there was big headwinds to Carvana's business model during the pandemic because prices for used cars were extremely volatile. It was unprecedented. Used car prices soared higher than those same cars were purchased several years ago. I got a quote on my 3-year-old car or 4-year-old car at a price that was several thousand above what I paid for it in 2018 or 2017. How can that be? That never happens, right? When you buy a car, everyone knows it depreciates 20% immediately as soon as you take it off the lot, or 10% immediately as soon as you take it off the lot. But during the pandemic, things were unprecedented. And that was one of the situations that was unprecedented, where you had used car prices higher than what they were brand new when you bought them several years ago. And during that time, Carvana continued in its business in buying cars and selling them. But then things normalized. So Carvana got stuck in a bad situation where it was paying those really high unprecedented prices for those used cars. And then when car prices normalized, it wasn't able to sell those cars at those same high prices. And so Carvana was in this really, really bad situation. It had to take drastic measures to get itself out of that hole. But now it looks like it's getting back to normal operations, where it's extremely successful in its core responsibility, in its core competency, which is buying and selling used cars in a market that's desperate for reputable players like Carvana and CarMax, because this is a fragmented market with many, many used car dealerships across the country. And if you've ever bought a used car from a used car dealership, it's not a very pleasant process. You don't know the quality of the car you're buying, but the person selling it to you knows the quality of the car you're buying. And so that leaves the consumer in a poor situation, comparatively speaking, in terms of negotiating position. And consumers would love for a reputable company like Carvana and CarMax to grow and take larger market share of the industry and really provide some standards industry-wide in terms of used car quality and assurances and delivering to customers. So it's an industry that's ripe for disruption. It's an industry that even though I've highlighted I don't like the car manufacturing business, I dislike that business, but this used car business, buying and selling used cars, is one that I think can be an attractive business because the industry wants, it craves, it highly demands that intermediary, that person in between, to make sure the quality is standardized, to make sure that consumers, when they're buying a car, they can buy at a quality level that is at least acceptable, and they can feel comfortable they're not buying a lemon. So I like this industry. I like Carvana's growth prospects longer term. So management said that despite carrying significant excess capacity and having room for meaningful efficiency gains, they just delivered $49 million in net income, and they only have 1% market share in one of the largest retail markets in the US. In other words, what they're saying is they can grow a lot more without needing to spend more on capacity. Like they've got room to grow without needing to spend on more locations, without needing to spend in more infrastructure, more logistics, more corporate expenses, things of that nature. So that means there's leverage embedded in the business. As revenue grows, it'll lead to better profitability because they won't need to add as many expenses for this growth to come online. And then the bigger item there, just 1% market share, meaning there's a large addressable market opportunity that Carvana can grow into if it can continue at this rate. If it can continue, man, if it could generate over $6,000, as I highlighted earlier, over $6,400 gross profit per vehicle, those are phenomenal margins. If it can generate this, that means it can fund growth opportunities for taking larger market share in this market for a long time to come, because that's a great building block, a great foundation for your business when your unit economics are that profitable, when your unit economics are that strong. Now, there is competition, right, with CarMax and others and the fragmented industry. So it's not going to be easy, but the opportunity is there if Carvana can capitalize. So even after increasing, Carvana's stock price is not extremely expensive. It's trading at a forward price to sales of 0.778, way above the bottoms it was at in January, when its future was January of 2023, I should say, when its future was more uncertain. It had to take drastic measures, raise a lot of debt. It was in a cash flow constraints. It's in a better position now, still not great, still recovering from those drastic measures, but it's in a significantly better position than it was before. So to update my recommendation on Carvana stock, I had it rated as a hold or a market perform. I will acknowledge the company delivered an excellent quarter, but given its history, given the drastic economic situation it had to dig itself out of, I want to see a little bit more performance, a little bit continued persistent recovery before I can upgrade the stock. But it did make progress towards becoming rated as a buy. It made steps towards there, but not quite there yet. So a good quarter, but I'm keeping it rated as a hold for now. I wouldn't be surprised if in 6 months I upgrade this stock if they continue at the rate of progress they've demonstrated so far. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.